So welcome class. Welcome students. We are going to discuss, this is Monday 4th April 2022 paper, Financial Accounting CPA, and there are so many other students who can benefit from this, those doing a diploma, degree courses, and of course we can see we have CFA, we have CS. All these can benefit from this. So we'll be tackling the whole of this paper, but we'll go step by step. So we'll start with question 1 and then move to the rest as time goes by. Okay, so 4th April 2022 paper, question 1. Highlight 5 elements of financial statements. Highlight 5 elements of financial statements. Now the elements of financial statement, I'm not going to spend a lot of time on this, but the elements of financial statements are things that we've been discussing before for so long. We have assets, we have liabilities, and you might also want to have equity, because today we normally differentiate between liabilities and equity. Though if you go into, if you try to summarize this information, equity is part of liability because you owe. The business will be owing some people some money. So we have assets, liability, equity, we have revenues, and we have expenses or costs, whichever the one you will find easier to use. So we'll just try to define, though the question wanted highlight. These are the major elements of financial statements, and they make up the key components of any of our accounting information. So assets are resources owned by the business, and can be used by the business to further their mandate, their purpose, basically to achieve their purpose, what they wanted to achieve. So resources that are owned by the business and used by the business, they are the ones that support the business in the course of achieving its mission. Then liabilities are obligations that are unmet, obligations by the business. This means that after some time, the business is supposed to repay them or meet the same obligations when they mature. That's why we call them liabilities, to mean that the business has some obligations to meet after a short while or after a long period of time. Normally we have, just like assets we have non-current assets, and we also have the current assets. For liabilities, we have the short-term liabilities, and we also have the long-term liabilities. Example of long-term liabilities are debenture. Example of a short-term liability are overdrafts, accruals, provisions for bad and doubtful debts can also come under short-term liabilities. So liabilities are obligations. Equity is the net worth of the business, or ownership, the capital contributed by the ownership. So it's the net worth of the business, the initial money that was pumped into the business to help the business start up, or for the sake of growth of the business. So we simply call it net worth, or the capital that has been pumped into the business by the ownership. Revenues are what the business attracts, the sales, from the sales, what the business attracts from the sales in the course of the business, not just any sales. For example, if you sell part of the non-current asset, that will not form part of we talk of different types of revenues. We have the capital revenues and we have the operating revenue. So when you sell capital items, that one will go under capital revenue. But the normal business, what you are meant to do, that should come under the operating revenue. So revenues, basically monies that come into the business, and I've said we have capital revenues and we have operating revenues. Operating revenues, the real reason why you are in business. Capital revenues, these are the monies that might come in the course of, and basically resulting from sale of non-business directly related items. When you sell items that are not really the reason why you are in business, then we can talk of, especially things like non-current assets, then we can talk of capital revenues. Operating revenue, that's the normal revenue when you sell things that are in line with the business, what you're actually supposed to sell. So revenues, money that comes into the business. Expenses, the outflows, money that goes out of the business. Of course, there are expenditures that have to be met here and there when you're talking about furthering your business prospects. And we also have capital expenditure and we have revenue expenditures. Capital expenditures, when you money goes out of the business for the sake of capital items. When you're buying things that are long-term in nature, we talk of capital expenditure. When you're buying things that are short-term in nature, then with short-term and basically for the sake of the business, for business purposes, then we talk of revenue expenditures or operating expenditures. So these are the major elements of financial statement: assets, liabilities, equity, revenues, and expenses. Sometimes people confuse these elements with the books of accounts, and you'll get some people talking about financial statements where they end up talking about income statement, the cash flow statements, the statement of equity. Those ones might not really come out as, those are final books of accounts. But when we talk about elements, what makes up the financial statements, and these are the key items that make up the financial statement. So this should be able to give you 5 marks. The examiner was not so keen on explaining each of these. He just wanted you to highlight. So possibly just stating and a very simple definition, just description of what it is, will give you the 5 marks. Let's look at our number 1B. Fatuma Ali commenced business as a retail chemist on 1st January 2021 with an initial capital of 30 million, which she paid into her business bank account. She hired a shop manager at an annual salary of 2 million. In addition, the shop manager is to receive a commission of 10% of the gross profit. During the year ended 31st December 2021, Fatuma Ali did not maintain proper books of accounts. After an examination of the available records, the following information was extracted. Bank statement for the year. So we have that. The receipts, you can see this is bank statement. So the receipts we have there, then the payments are on the other side. Additional information: all sales were for cash and sales are banked daily, subject to the retention of cash flow of 100,000. The following payments were made out of the cash sales. So manager's salary, drawings, payment to suppliers, general expenses. As at 31st December 2021, checks sent to suppliers amounting to 2,500 had not been presented to the bank for payment. As at 31st December 2021, invoices from suppliers amounting to 8.6 million had not been paid. As at December 2021, inventory was valued at that figure, that's 6.5 million. Depreciation per annum is to be provided on the motor vehicle at the rate of 25% on cost. And on the shop fittings and equipment at 10% on cost. During the year ended that, Fatuma Ali took goods which cost 100,000 for personal use. So we are required to come up with a statement of profit or loss for the year ended 31st December 2021 and statement of financial position as at that date. This is a very fair question. It's a sole proprietorship account and it's also the incomplete record. So it's a fair question. Let's start on it. And you need to be very fast. Questions like this will require that you work on them within less than 30 minutes. In less than 30 minutes, you should be done with the question. So let's create a space and we should be ready to go with it. So Fatuma Ali, this is and the books are December 2021. So we always start, the starting point is the heading. So you say Fatuma Ali, and then what they want is the profit or loss. So you say income statement for the period ended, at first dec 2021. Then you underline, of course. Sorry, my line is going. So then you need to, I always advise 3 columns. So shillings, you can have 3 columns like that. I hope this time, I'm not getting it right again, but hopefully that will serve the purpose. Let me just draw another better line for the sake of it. I guess I'll get it right this time round. Good. Yeah, so there we go. And you can also choose to restrict the zeros, which is a good thing. In fact, from the question, they have restricted the zeros. So restrict the zeros at this point in time. So we go straight, we start our journey. And to get a profit or loss, the net profit, you have to start from the gross profit, from the trading account. So trading account, then we go to profit and loss account. Then because it's a sole proprietorship, that will be the end of it. So trading account is sales minus cost of sales. So we always start with sales. So you simply come here and have sales. Now we'll go back and identify the sales. But this question was a bit tricky. During the year ended at first dec, Fatuma did not maintain all her books. After the examination, the following are. So bank statement for the year ended this. This is the bank statement. Additional information. All sales were for cash and sales. All sales were for cash and sales. All sales were for cash and sales are banked daily subject to retention of cash flow. The following payments were made out of the cash sales. So allow me to just do some simple workings here. So we have sales. Sales is, you can see, this is the figure, 123,720. And then, but this is a bank statement. This is what hit the bank account. But there is some additional information here, especially on number 1, which is quite tricky, that all sales were for cash. All sales were for cash. And sales are banked daily subject to the retention of cash flow of 100,000. So this 100,000 is part of the sales. The following payments were made out of cash sales. So these are also part of the sales. The following payments were made out of the cash sales. So we receive the cash, but all sales are for cash. When we receive the cash, we take this money to the bank, and whatever hit the bank account was 123,720. The rest of the money was used to meet this expenditure, because these expenditures were met in cash. And there was also 100,000 that had to be retained at any given point in time. So if somebody asks you the sales, it is what hit the bank, which is 123,720, plus what they spent at source. And this is what they spent at source. Read again. The following payments were made out of the cash sales. All sales were for cash, and sales are banked daily, subject to the retention of cash flow of 100,000. So this is what was banked. 100,000 was retained, and these were basically spent at source. They did not hit the bank. So if we are asking for a sales figure, we'll have what hit the bank plus what is available in cash, which is 100,000. Now in our case it will be 100 because we are going to restrict the zeros. The zeros have been restricted here. So it's 100 shillings. These are cash flow. At any given point in time, every day we have to have a closing balance of 100. And then these are payments that were made out of cash. So we need to get the total. Give me 1 minute. Let me just get the calculator for this. There we go. So, there we go. Let's proceed. So, we'll have 1980 plus 4,000 plus 1390 plus 840. This gives us 8210. So, these are cash sales that were spent at source. How much is that? 8210, and the zeros have already been restricted. So, when we add this, we get 8210 plus 100 plus 123,720. This gives us 132,030. So this is the 132,030. So this becomes our sales figure. It is quite tricky. You have to be very keen to notice that. So then opening stock, we know the cost of sales. We start with the opening stock. So simply come here. There was no opening stock, I guess. This was a pretty fair. It was a new business, commenced business. So definitely there was no opening stock. So we go to, since there was no opening stock, we can as well ignore this line. But since let's just do away with it. I mean, there's no need to have it here when it means nothing. So let's go straight to purchases. So purchases, we have purchases here. Payments. Payment to suppliers is 112,360. 112,360. So this is also quite interesting. Payment to suppliers. So I'll do away with this. For your case in an exam situation, you might want to have the workings. So now let's talk about purchases here. Purchases. That was about sales. So purchases. We have payment to suppliers. How much did we pay? 112,360. 112,360. Okay, that is what we have paid. The bank has captured. The bank has actually recorded those payments. As at 31st December, checks sent to suppliers amounting to 2,500 had not been presented to the bank for payment. That is as good as saying that these are unpresented checks. We have paid them, we've given them the paper check, but the money has not left the bank. So it means this money has not been factored in the 112,360. So it's as good as we have not paid that amount. But let's just have it here because it's part of the unpresented checks. So this is how much? 2,500. Remember, there's restricted zeros. Checks sent to suppliers. We have paid them according to our cash book, but the bank has not, and we are using the bank statement. So let's include there. This is yet to be paid, but of course it's part of the purchases. So we are trying to find out the purchases. So what we paid them, plus what we've paid but they have not yet received, plus what is outstanding, which is number 3 now. We are done with this, number 3. As at 31st December, invoices from suppliers amounting to this had not been paid. This is outstanding, we have not paid. This one we paid, but they have not really received the money. We gave them the paper checks, but they have not presented the checks to the bank to receive the money. So what they have already received, which is this, what has been paid to them, but they have not received the cash, what has not even been paid to them, which is 8,600. So owing, debt owing, this is still owing, 8,600. And then, do you have anything else? Depreciation. During the year ended at first, Fatima Ali took goods which cost 100 for her personal use. Now, this one we might treat it in 2 ways. We might either put it under the sales and assume that we sold the goods to Fatuma, or reduce the purchases by 100. During the year ended at first, Fatuma Ali took goods which cost 100,000 for her personal use. Yeah, we might either want to put it on the other end, on the sales side, or we might want to have that included under. That's quite tricky. You just you might put it either side. I think for the sake of it, you might. Let's just assume, because we are going to charge the the drawings account. So let's assume we are selling these goods to her. She's going to buy them. Let's just sell the goods to her. And if we are selling the goods to her, then it means we will add our sales by that 100, so that our sales now will become 132, 130. 132, 130. Please, let's add the 100. This one we're almost forgetting. Let's add this. But you can as well treat it under the purchases and remove it from the purchase to assume that we did not buy. So for the sake of it, let's put it under the sales. So to show that we sold the goods to Fatuma. So we are treating it as sales. We will charge her drawings, the drawings account. Okay, so that is our sales. So purchases, I think we are done with purchases. Is there anything else for purchases? I doubt if there's anything. So if you are convinced that this is what purchases is, then let's add 112, 360 plus 25 plus 8, 6. What do we get? 123, 460. 123, 460. Like that. So 123, 460. You come here, you say purchases, 123, 460, like that. And then, of course, we less the closing stock. Closing stock. I've seen the closing stock, the figure is just here. So closing stock, as at December 2021, inventory was valued at 36.5. Remember the restricted 0, so 36.5, like that. You less. So 123, 460 minus 36, 500. What do we get? 86,960. 86,960. Like that. So we less minus 132, 130. This gives us 45,170. 45,170 as our gross profit. Gross profit. 45,170. So then we go to the second part. The second part now is the profit and loss. And the profit and loss now we less all the expenses. So we start with interest on bank loan 1,000. I doubt if there is any working on that. So interest on capital 1,000. Then we go to general expenses 83.35. I think there was something on general expenses. 83.35. There was something on general expenses. Yeah, general expenses is here. So the following payments were made out of cash sales. General expenses 840. So this general expenses from check, this is cash. So general expenses, we have bank 83.35. Now you might want to use this, and then you have cash 840. Then you add the two, 83.35 plus 840 to get 91.75, like that. That's how we go about it. And then we move on with our rent at 750. Is there something on rent? Sorry, there's a mistake somewhere. There is a mistake somewhere. Sorry. There's payment to suppliers here. This is cash. Payment to suppliers. You need to be very keen. Sorry for that. There's payment to suppliers here, 1390. Which you have not included. So this was payment by check. There's payment by cash. Cash, 1390. 1390. Please, let's just do that correction before we proceed. So payment to suppliers, 1390. let's add that, please. Let's add that. So 123 460 plus 1390. This gives us 124 850. Sorry for that. 124 850. 124 850. We're almost forgetting that. 124 850. So we come here, change this, please. Now we are changing a lot of things, and this is not allowed in accounts. We are not supposed to delete. I'm taking the advantage of my board, but for you in an exam, 124 850, you need to be very keen. So purchases 124 850, 124 850 less the 36 500 minus 36 500, that gives us 88 350. 88 350. So minus 132 130. This gives us 43 780. 43 780. Please take note of that. Please take note of that. That was very important. So we had left this one out, payment to suppliers. This was cash. We paid them by cash, we paid them by check, and then this and this. That's how it's supposed to be. This is the workings for purchases. Thank you for that. Let's proceed. So the general expenses, we've already added that. The drawing, this one will not feature now. And then, of course, there's manager salary. This one, there's something they said up there. So we'll go and check. Rent, 3750. So I think that one doesn't have any workings. Rent, 3750. Then we go to next. Balance carried forward. No, this isn't balance carried forward. There was something up here. She had a shop manager at an annual salary of 2 million. In addition, the shop manager is to receive a commission of 10% of the gross profit. So she had a shop manager at an annual salary of 2 million. So that makes salary 2 million. Whether she's paid or not, salary 2 million. And I've seen she was the manager was only paid 1980. So the remaining 20 shilling difference, 20 difference, 2 million, that is 2000 minus 1980. The difference is 20. This 20 will go to the balance sheet as an accrual. But in the P&L, we will show the entire amount that the manager was supposed to earn for that particular year according to the accrual concept. So we'll just put 2000 and not 1980. The difference will go to the balance sheet. Normally what we show is what he has been paid plus what is outstanding. So he was paid 1980. What is outstanding is 20. It will still come back to 2000. So we show 2000 and not 1980. So we've taken care of this. Thank you. So then we come here. There is something again here that in addition, the shop manager is to receive a commission of 10% of the gross profit. So commission, 10% of gross profit. So commission, 10% of gross profit. How much is that? Our gross profit is 43,780. So 10% of 43,780. This gives us 43,78. 43,78 as our commission. Then check if there's anything we are leaving out because we're almost winding up. We've captured this, we've captured that. Oh, depreciation. Depreciation is to be provided on motor vehicle at the rate of 25% on cost and on shop fittings and equipment at 10%. So depreciation 25%. Have depreciation. Motor vehicle. This is 25%. And then furniture and fittings at 10%. So 25% of what? Motor vehicle is on cost. All of them are on cost. So you just get the cost of motor vehicle. Have we really been given the cost? Yeah, because they were bought this same year. So motor vehicle is 2740. 25% of 2740. 0.25 times 2740. This gives us 685. So 685. We might want to add these depreciations here and then take the total the other end, just for the sake of it. And furniture and fittings is 10%. Furniture and fittings. So look at the cost of furniture and fittings. Shop fittings 8,800. This 10% of 8,800 is 880. So have 880 here. Add the two. This will give you 1545 if I'm not wrong. 1545. But just to confirm, 685 plus 880 and give you 1565. It's always good to confirm. You can see 1565. So there we go. I doubt if there's anything else we are leaving out. Is there anything else we're leaving out? If there's nothing, then let's get the total. So this is 1000 plus 9175 plus that's 750. That's 750 plus 2000 plus 4378 plus 1565. That gives us 21,868. 21,868. 868. And since these are the expenses, we less from there. Minus 43,780. That gives us 21,912. 21,912. This becomes our net profit. Net profit. So if that is our net profit, then we go to the next part. We say Fatuma Ali. Statement of financial position. Statement of financial position as required by the question. Position. And this is as at 31st Dec 2021. And as usual, I will have three columns with restricted zeros. With the restricted zeros. Like that. So then we come here and we always start with the non-current assets. Non-current assets. And I saw something like premises up here. So they will start with that. Leasehold premises. Of course, there was no any depreciation on it. So leasehold premises. Leasehold premises. The figure is 20,000. There was nothing. So net book value is 20,000. Normally here it's the book value. Then you have the depreciation accumulated, and then you have the net book value, like that. So then we had, of course, we had the motor vehicle, and we had furniture and fittings. I still remember the figures. I think this one was 2740, and this one was 8,800. Then this one depreciated by 685. This one depreciated by 880. So let's just confirm this information before we can continue. Yeah, motor vehicle, you can see 685 and furniture 880. Let's get the figures from the question. For motor vehicle, 8,800 and 2740. So 8,827.40. So let's subtract and see what we have. 2740 minus 685. This gives us 2055. So 2055. And then 8,800 minus 880. That gives us 7920. 7920. I doubt if we have any other non-current assets. So we are going to add that, and we get 29,975. So that is the value of non-current assets. So we go to current assets. Current assets, I will start with the inventory. The inventory was just here. You know, these things, as you get used to them, inventory 365. These are the low-hanging fruits. Just get them very fast. And you know, in accounts, we mark the transactions that you post. So you cannot afford to waste time with this. So 36500. Of course, we have bank. Bank, just go to the bank balance. Check. This is the bank statement. So this is the bank balance. So let's pick it as it is. 16,735. So bank 16,735. That is the amount that is in the bank. So don't worry about so many other things, the unpaid checks or whatever. Just pick the amount that is in the bank, which is 16,735. You have always to counter check your figures. you can see the error that we wanted to, and these are the common errors that people make. So bank, we've captured it. There was also something about cash, that cash at any given time was 100 shillings. It was 100,000, but remember we are restricting the zeros, so we'll work with 100. This one. The statement is very clear. Subject to retention of cash flow of 100,000. So every time you take money to the bank, there was 100,000 that will be left in the business. So we want to assume that even now when you are closing the books of accounts, we have 100,000 that is still with the business. So cash 100,000. Then let's check if there's anything else left. You have to make sure that you capture everything: leasehold, payment, interest, rent, all sales, manager salary, drawings, payment, supply, general expenses, that one, these are that one, 100 for his personal use. So I doubt if there's anything else, and if there's nothing, let's get the total. So this is 36,500 plus 16,735 plus 100. That gives us 53,335. So get the total, 53,335, like that. And then we can go to current liabilities. So current liabilities, I think we start with loan. Let's assume these are short-term loan. So bank loan 20,000, bank loan 20,000, bank loan 20,000. So we'll have it there, 20,000. Then we can also have, there was something else, capital, now that can come in later. Anything else we are seeing? Now, manager salary, there was something about this. There was an accrual of 20. We only paid him 19.8 instead of 2 million. So accrual, and this is salary accrual. We have 20 shillings. And then now, these are outstandings. These are debts. We'll treat this as if we have not paid, because we gave them the paper check, but they have not gotten the cash. So we'll assume we've not paid. So when we talk about outstanding, the creditors, accounts payable, we'll have these two, 25 plus 86. This one has not been paid. This one have been paid the paper money, but the money they have not received. We still have the money. So we'll treat it as outstanding. So just add the two, you'll get 11,100, and this will form our accounts payable. Accounts payable. So accounts payable, how much? 11,100. I think I've added correctly. That was 25. So let's go to counter check, plus 86, 11,100. I think that's the figure we have. Do you have anything else remaining? Inventory, these are depreciations, we've taken care of that. Okay, so having done that, let's get the total. This will be 31,120. 31,120. And this is in bracket because we are now, these are liabilities. So 29,975 plus 53,335 minus 31,120. That gives us 52,190. 52,190. And this becomes our non-current, net capital employed. Net capital employed is 52,190. Then we say financed by section, and of course we have the capital at 30,000. Capital was 30,000, and then we have net profit. So capital 30,000, you may just want to confirm capital. It was here. Capital, she started business with an initial capital of 30 million, but we are restricting the zero, so 30,000. And then of course now we have the net profit. We add the net profit, 21,912. So 21,912, 21,9. There's something we have forgotten. There's something we've forgotten. Just realize there's something we've forgotten. It was quite tricky, hidden. There's something we must have forgotten. Yeah, I've mentioned net profit and I've remembered. You remember there was this thing on, where is that statement? She had a shop manager at annual salary of this. In addition, the shop manager is to receive a commission of 10% of the gross profit. 10% of the gross profit. The shop manager is to receive a commission of 10% of the gross profit. We calculated that as an expense. But was it paid to him? We have not been showed anywhere that the 10% was paid to the manager. So that means that that amount is outstanding, because this is the bank statement and nowhere it has not been paid. And even the cash, this is the cash, nowhere it's showing that that 10% was paid. So it means it's still outstanding. It's an expense, yes, but it's still outstanding. So it needs to be captured in the balance sheet as so. So I think there's something here we were leaving out, and again, sorry for that. Let's just, because this might not be correct now, so let's just pick it up from here. So what is this? That is what was it? Commission, outstanding commission. We'll call it outstanding commission. Outstanding commission. How much was it? It was here. We are putting it in the balance sheet because it was not paid. 43.78. 43.78. Good. Quite tricky. This question was quite tricky. It was very tricky. So 20,000 plus 20 plus 111.00 plus 43.78. 35,498. 35,498. Very tricky question. So this is net capital employed. And it's very good so that you can see how these questions are set. Very important, so that you just don't assume things to be normal. 299.75, especially in an exam setup. This is a war-like situation, and the examiner is testing you on so many things. 498. So you get 47,812. 47,812. Like that. So that becomes our net capital employed. 47,812. Now that should be correct. So the net profit, our net profit will still remain that 21,912. Yeah. And then of course we now less the drawings. Drawings. So our drawings will be, remember there was drawings of 4,000. Yeah, drawings 4,000, and then he also took goods worth 100. So drawings is 4,100. Drawings will now be 4,100. The 100 is here, the last item. If you are just doubting, during the year ended, that only took goods which cost 100, and we added in the sales. So this will give us how much? 30,000 plus 21,912, that is 51,912 minus 4,100. That gives us 47,812, and I hope, yep, that's good. It has balance. 47,812. So these are net capital employed. You can see net capital employed, 47,812, 47,812. So that is the question, but I give it to the examiner of this question. This was a very good question, very tricky to the students, but that's how you go about it. I know you must have learned a lot from this question. So thank you. Let's meet in the next question. That's how you go about this question. Thank you.